taken a real knock.
That's right. It's certainly been discouraging news, Brian. German government bonds remain the safest in Europe, but there was far weaker demand than anticipated at a bond auction this Wednesday. This pushing borrowing costs even higher for other Eurozone nations and sent the euro lower. The new bond promised to pay out a 2% interest rate, the lowest ever on an issue of German 10-year bonds. The lack of buyers fed fears that the region's overall debt crisis is driving away investors.
The German finance agency is charged with selling debt for the government in Berlin, and normally it's a pretty easy job. German bonds are popular investments, but suddenly buyers seem to think they are not offering enough yield. The gap between interest rates paid for bonds by different Eurozone governments is growing. Italy and Spain pay nearly 7%. France is paying over 3.5% interest. Germany pays the least, so far not even 2%. If the trend continues, France risks a downgrade in its credit rating. Two agencies have already stated that France's AAA status is under review. A dangerous position for the Eurozone's second largest economy.
The major flop of German bond sales was just one factor ratcheting up the pressure on Asian markets. With trading still underway in Hong Kong, the Hang Seng Index is dipping slightly into the red, but Tokyo is deep in the red, with the leading Nikkei index losing nearly 2%. A factor here is the poor figures from New York. The Dow Jones had also lost about 2% by the end of the day's trading. Well, for more, let's turn to our correspondent Dorte Holtz, who's standing by for us at the Frankfurt Stock Exchange. Dorte, what can we expect today? What's the mood like in Frankfurt?
Yeah, given the heavy losses in New York and in Tokyo, the German DAX is doing in the first minutes pretty well. The DAX can climb more than 1%, which comes after the heavy slump so far this week. But the mood could change in less than an hour, because traders are waiting for the most important economic indicator in Germany, the Ifo Business Index, and economists are pretty pessimistic. They do expect the fifth fall in a row. For sure, German companies do react also on the worsening Eurozone crisis.
Now, the leaders of the three biggest Eurozone economies are meeting later today. Germany's bond auction from yesterday could be a talking point.
So it is, and traders hope that this failed bond auction will be seen as a warning signal for the German government to act very quickly in this Eurozone crisis, because even the OECD said that this auction was a sign that investors are now worried about the entire Eurozone, and then we are coming back again to Eurobonds, and Eurobonds, or a stronger and more essential role of the ECB will for sure be the main issues today in Strasbourg. Especially France is calling for more commitment from the side of the ECB. Yesterday, the German Chancellor sounded indeed very clear in her opposition against Eurobonds, but when you listen exactly, you could see that she mentioned above all the wrong point in time. So investors are really very eager to see when the German turnaround will come.
All right, Dorte Holtz in Frankfurt, thanks so much for that update. Well, let's check out what the equity and currency markets are doing right now. In Frankfurt, Germany's blue chip DAX is currently going up over 1% to 55.15. The Euro Stoxx 50 also up almost 1% at 21.17, and the euro is trading for $1.3373. Portugal's biggest trade unions have called for a 24-hour general strike today to protest the government's planned austerity program. It includes longer hours for workers and pay cuts for public sector workers. Among the first to walk off the job were staffers at Lisbon's airport, where operations came to a halt Wednesday evening. Public services, including transport and hospital care, are also affected. Portugal's parliament votes on the austerity package next week. And for more international news, it's back to Brian.
Thanks, Ariane.